Someone thinks we could get to $15,000 by what's
No,
that maturity?
sometime in November. Yeah, the third. It's the
Yeah.
third. Yeah, but the other thing as well, Clive, someone expects a sharp move higher because let's say we move from like around 5,000 where we're now to like 6.5 in a matter of weeks. You could see these prices really jump. Even the 15 and 20,000 calls. So they want exposure to what the options traders call gamma, where the price moves even though it's not near the money. If it moves sharply higher, gold, and there's still a lot of time, these options could double in value and they just get out. But it's a risky thing, of course, because if
I would have.
gold doesn't do anything very sharply, they will become worthless. But like you said, maybe someone does expect something to happen, some kind of revaluation like we've spoken about.
A massive speculative bet has emerged in the precious metals market, targeting a gold price of $15,000 by November 3rd. While hitting this strike price seems extreme, the strategy likely focuses on gamma exposure, profiting from a sharp, sudden move higher, such as a jump from $5,000 to $6,500 in a matter of weeks. If such a spike occurs, the value of these deep out-of-the-money options could double rapidly, allowing traders to exit with massive gains well before the maturity date. This suggests an anticipation of a drastic market event rather than a slow grind higher. However, this is a high-risk all-or-nothing play. If gold consolidates or moves slowly, these contracts will expire worthless. MarioInnecco, financial analyst and host of MoneyInnecco 64, and Clive Thompson, a seasoned wealth manager, debate whether this trade signals an imminent currency revaluation event or merely a gamble on extreme volatility. They analyze the potential for a systemic shock that could validate such aggressive positioning before the year ends. Now, we present the clips from MarioInnecco and Clive Thompson's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
This is the gold options on COMEX, and this is the December 2026, so it expires probably sometime in November this year. And if you scroll down here, and this is the open interest. If you scroll down, oh, these are puts now. So there you go. The 15,000 calls, Clive. The open interest is over 8,300, which is huge. That's, you multiply that by 100 ounces. And I think yesterday that call traded for $15. So it's like over almost $15 million someone's willing to pay for a 15,000 call. And also the 20,000 call, the open interest is almost as much. And I think it traded yesterday for almost $10. So you do 10 times 7,800 times 100, which is 100 ounces per contract. And someone is spending roughly almost $8 million buying these calls.
Are they, you say $15,000 call? Is that $150 or how does that work? Why is it
No, it's a
15,000?
strike. It's a strike price of gold at 15,000.
Oh, it's on gold. Okay.
Yeah, yeah.
I thought silver. Yeah, okay. That was
No,
possible.
yeah, this is gold.
So
So
someone thinks we could get to $15,000 by what's
no,
that maturity?
sometime in November. Yeah, the third. It's the
Yeah.
third. Yeah, but the other thing as well, Clive, someone expects a sharp move higher because let's say we move from like around 5,000 where we're now to like 6.5 in a matter of weeks. You could see these prices really jump. Even the 15 and 20,000 calls. So they want exposure to what the options traders call gamma, where the price moves even though it's not near the money. If it moves sharply higher, gold, and there's still a lot of time, these options could double in value and they just get out. But it's a risky thing, of course, because if
I would have.
gold doesn't do anything very sharply, they will become worthless. But like you said, maybe someone does expect something to happen, some kind of revaluation like we've spoken about.
I would have thought these options were fairly cheap to buy. I don't know what it would cost to buy
Well,
an
let's have a
option which is
look. We got the
so far out of the
quotes.
money.
We got the quotes here. We got the right month. This is March. Let's change it to deck.
You got
We
the
need
strike price in the
all of them,
middle.
all of them.
Yeah,
Yeah, I noticed, I think yesterday they traded at the 15,000. Here they are. They
15.
settled at 15
Yeah,
and the
so
20,000 settled at 10.
a
So
thousand of those options would cost you 15,000. For one option, it would be 1,500.
yeah.
Yeah, I can't tell you what the maths is, but that's a lot of money.
Yeah, yeah, yeah. So there you go. Yeah, what there could be betting on is that volatility will go through the roof. Let's say we move from 5 to 7 in a couple of weeks and we see another sharp move higher. These could become worth like 20 and this could be worth 30 and then they'll just get out and double their money. But I think it's quite interesting that they're buying such out of the money stuff.
A massive speculative anomaly has emerged in the COMEX gold options market, with traders pouring millions into deep out of the money calls for December 2026. Open interest data shows over 8,300 contracts at the $15,000 strike and nearly 7,800 contracts at the $20,000 strike, representing a combined bet of approximately $23 million. This aggressive positioning indicates that a large entity anticipates a catastrophic repricing or revaluation event that drives prices vertically over a short time frame. The mechanics of this trade rely on gamma exposure rather than the expectation that gold will actually hit $15,000 by November. By holding these cheap contracts, the investor stands to profit immensely if volatility spikes and gold moves sharply to $6,500 or $7,000. Such a surge would cause the option premiums to double or triple, allowing a profitable exit well before expiration. However, this high-stakes strategy requires immediate and violent momentum, otherwise these contracts will likely expire worthless. Let's get back to the interview.
If we look at what's going on at the moment, gold, silver falling, stocks falling, Bitcoin falling, people are rushing for cash at the moment, but they're going to be in cash and then they're going to start thinking about this in a few weeks and say, what am I doing in a depreciating asset? Then they're going to go back into something else.
Yeah.
So the guessing game, Mario, is when people return out of cash into something else, where will they go? I'm betting it will be the commodities sector.
Yeah, my ounces of gold and silver are on gold and silver and commodities, hard assets. I mean, even Ray Dalio, did you see? He thinks the current monetary, well, he called it a monetary system, but John Exter, who was like a gold bug and New York Fed member back in the 70s, he wrote about the fiat dollar being I owe you nothings. And he said we had a system, it was the Bretton Woods system, and then we abandoned it. So we have a non-system. But anyway, Ray Dalio thinks this system is on its last legs. And he thinks gold and I think silver is going to come back as well.
We're at 5 minutes to midnight when it comes to the world's financial system, at least the post 71 financial system. I don't think that it's possible for government debts to continue to escalate at the rate they're going without something going terribly wrong.
Yeah, and unless, maybe, unless they revalue gold, the US, and then that will cushion their debt load. But you can't keep doing that, or else, what the underlying Clive reason for the problems is too much government spending, I think, and too much money printing.
Yeah, it's at the end of the day, as the government borrows money, it gets poorer, and someone somewhere gets that money, and they're going to put that money they get into some sort of asset. They're not going to leave it sitting in cash forever. They might leave it for a month or two while they try and second guess where the market's going. But at some point, they're going to say, I'm not going to stay in a depreciating asset for the next 30 years because it will buy me nothing. So they're going to move into property or equities or Bitcoin or gold or silver or whatever takes their fancy at the time. Might be collectibles.
Yeah, I listened briefly to President Trump was interviewed the other day about the economy and the debt, and he said what we want to do is grow the economy enough to make the debt smaller. But and yes, U.S. GDP is like 4%, but a lot of that is to do with AI, isn't it? I mean, AI is contributing to massively to GDP. I think we saw some employment numbers yesterday that were really weak in the U.S. And today they're not publishing the non-farm payroll. Their excuse is that the government was shut for a while and they couldn't compile the data, but maybe it's a really bad number and they decided to give that excuse. But do you think they'll be able to grow out of the debt like President Trump and maybe Besant think they can?
Well, there's a plausible story that we will move into a world where effectively all businesses are run by artificial intelligence, and we can all sit at home watching Netflix with a universal basic income. Meanwhile, the economy continues to grow due to these intelligent machines. It's a wonderful world to look forward to, but it's going to come slowly, if it comes at all. But yes, I do sincerely believe that we are in a situation where artificial intelligence, we've got two things going on. One, we've got the money changing hands in the AI sector, and we're talking about mega amounts of money changing hands from one company to the other, creating sales and profits left, right, and center. And that's the incestuous behavior I was talking about earlier. So that is boosting GDP on the one hand. And then the other aspect, of course, is we've got the ongoing benefits of companies becoming more and more efficient. That'll be a very slow process, but over time, some employees in most companies will become faster workers or more efficient than they were before. And that's got to, at the end of the day, boost output.
Yeah, and they'll be able to do more, and they'll have more time to do other things as well if, a certain task doesn't take as long because AI helps. So anyway, Clive.
I'm working on it's not out yet, but it'll be out within 2 weeks, so people can keep tuned to that. I'm working on an educational series for children, where children will, through a children's story idea with lots of children's pictures, will learn about words like inflation, what is a loan, what is to borrow, what is to lend, what's interest, what does it mean to get, what's the word getting fired is, what is a landlord, what is rent, what is a tenant. So keywords for children who are not learning these words in school. It's going to be targeted at kind of 8-9-year-olds, but it'll be great fun for the adults because I'll be bringing in the names of some important people like Mr. Elephant Tusk, who runs the car factory, or Geronimo Powell, Geronimo Prowl, the owl, who runs the Meddlesome Reserve Bank in Toy Town. So there'll be a little bit of fun for the adults too.
The current market flush, where gold, silver, and Bitcoin are falling in unison, is a temporary liquidity event driving investors into cash. However, this safety is illusory. Cash remains a depreciating asset in a fiat system defined by excessive government spending. As the realization hits that the post-1971 monetary order is at 5 minutes to midnight, capital will inevitably rotate out of paper currency and back into hard assets. The smart money is positioning for the commodities sector to lead this next leg higher as the only hedge against a failing system. While artificial intelligence promises long-term efficiency gains and a potential future of universal basic income, the immediate economic reality is contradictory, masking weak employment data with incestuous tech spending. The notion that AI-driven growth alone can outpace the escalating sovereign debt crisis remains a hopeful narrative rather than a mathematical certainty. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.